Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson, and it's a beautiful Memorial Day here in South Dakota. Going to enjoy the weather. Going to get out and get some stuff done today since I don't have to watch the markets. I do want to send a very big shout out to all of the veterans out there. Anybody and everybody that has served in the armed forces or is now serving in the armed forces, thank you. Really, thank you. You can like war, you can hate war, it doesn't really matter. The truth of the matter is, freedom is not free. You have to fight for it. And thanks to you, I'm able to sit in my chair and do videos about the markets. I'm able to make comments on things that other countries would never allow me to do. So, thank you guys for doing what you do for all of us. Believe me, it does not go unnoticed by I would say most of America. So thank you. All right, we now prepare for tomorrow and the reopening of the markets. What do we see in front of us? Well, as you can see, we have broken one of my falling lines. Now, as long as this line holds, that is bullish. That is bullish, and there will be more bullishness to come. This does not mean that we are definitely going straight up. That's for sure. This just means that the momentum has started to slow a little bit from the last few weeks, and so we may see a bounce here. Very early to tell. I got to doing a little bit of work over the weekend, and I will tell you, man, the markets are so good at this. They're very good at leaving you in limbo over the course of a weekend, and that's what we see here. What you want to do is watch for this 99.50 area down here. 10,000 obviously first, and then 99.50. Breaks below 99.50 could give us a retest of the lows, and maybe we get below it. But I don't know if I would be going all too bearish anyway until we break this 99.50 area. If you're not in a position already, if you are positioned short, I would let it run and see what happens. The other area to watch then is the 10,300 area, somewhere up here between 10,300 and 10,400. I guess you can split the difference and go 10,350. Would be another entry to the long side on an intraday basis. If you really want to get back into this market and swing trade it, 10,500 is probably a little bit better area to start looking for that. We can probably see that a little bit more clearly on the daily. And the reason for that is you would then be up above the 200 and up above the 20 and up above this blue line. That is a lot of up aboves, guys. We need to get price back over all of that area before I think I'll start looking at a more major swing long in the I shouldn't say major swing long, at least a shorter term swing long in the markets itself. So 10,500, between 10,450 and 10,500 is your mark if you're going to swing trade this market to the long side. Anything back below 9,900? I don't know. Just keep waiting. You just keep waiting for it to finally give you some sort of better entry. But this would be a pretty big break if it got back below about, let's call it 9,800. 9,800 is by far the more conservative entry, but 9,900 still gives you a pretty good place to get short if you're not already in that position coming off of the 3-day weekend. NASDAQ on a 60-minute, same thing, but stronger. You'll notice it broke this blue line. We've retested it, and we've held. Okay, let's see if that happens on the other indices. Approaching this 1880 area, which has been an overhead resistance area of mine for a while, that breaks this other blue line. Then you're probably looking at the 1920 to 1940 area, somewhere up in here. Let's say 1935 because it is the 200 period moving average, but who knows what that 200 period moving average will be by the time we get back up there. So watch that area closely on a break above there. From a daily standpoint, look at all the chop we've been involved in. And you can see that we have a lot of work to do now from the bulls to get back up and over the 1900 area. That would be a better place for a swing long. And then back below maybe 18, let's call it the 200. It's got to get back below the 200 for any kind of a swing trade to the short side. If you're intraday trading, you can maybe catch some of this. up to the 1900 or down to the 1825-ish area. Doesn't leave you a lot of room, but for those of you that like the quick in and quick out, that's not a bad place to be playing it. Look for bounces off of those areas. From a weekly standpoint, you can see we are still wandering our way downwards right to the 50-week moving average. We've had, I'm going to say, 3 touches of it right now. This last week didn't quite touch it, but close enough for me. So we have a 1, 2, 3 tags of the 50 week. You can see it just beating its head against it, trying its best to get through. And we are now below the 20-week moving average. So we're trapped in this little area. For those of you that like to hold on a little bit longer, these are the 2 major areas to be watching as we push forward. SPX on a 60-minute doing the same thing. Break, test, run away. Now it's moving up towards this upper level. Now notice that this is above the 20 and the 50. It holds right here in this area, and you can see a push towards 11:15. I'd say 11:10, 11:15, right up into that area. It's a very plausible place to see price action go. Will it break this blue line? If it does, then you're looking at 11:30-ish to maybe even 11:50-ish once we get above these areas. But still, as I've said on the other indices, the market's left us right in between stuff. Right in between stuff. Maybe breaks below this 50, give you short positions, but right now, as it stands, we are just wandering sideways. There's nothing here telling me trade one way or the other. Now let's see what the futures do over the weekend and see where they open up come tomorrow morning. That could make a big difference. Maybe there's a big drop down. Maybe there's a huge rise up. We don't know yet. But as it stands right now, what I'm getting from the charts that are in front of me, that is, we're right in between a bunch of support and resistance. Very tricky trading in here. You're better off sitting on your hands, saving your money, looking for individual stocks to trade as opposed to the indices. Let them wander around and give you a direction. The SPX on a daily, still below the 200. That's your more major area to get up and over. Really, they need to get above 1130. That crosses all of this overhead resistance. And then back below, I'd say, call it 1050. 1050 is the really major level down here. 1055 probably is where this sits. Yep, 1055. That would be a better place to be entering to the short side if you want to swing trade this. If you're day trading, you can probably get some profits getting, if we get somewhere below, let's say 1080, 1080, something like that. Probably 1085, somewhere below there. From a weekly standpoint, you can see us wandering down after a perfect hold of the 200-week moving average, now getting a perfect hold of the 50-week moving average. Did dip below it the last couple weeks, but price was able to get right back above it by the end of the week. So looking for breaks ultimately of this 1025 area down here. That would be very major for the bears, and the bulls will most certainly be wanting to hold that level before the end of the week comes around. Year 50, though, is right at 1075, so you're watching for breaks below that. VIX on a daily, it'll skip right to a weekly, and you can see this chop we've been in. Big move up, sideways, sideways, sideways. So 1 week of major moves to the upside, then 1, 2, 3 of kind of this chopping sideways type of work. So we're almost a month into this, and we're continuing to stay up in this, what I call the red zone, where this is a lot of fear coming into the markets. Now, it did fall towards the end of last week, but if this line holds, it's not going to go very far to the upside, and it's going to turn around and head right back up towards this 50 area, which means more bearishness in the markets. Apple on a 60, I think, looks very clean, guys. For